Hey guys, what is up? Today I'm gonna show you guys how to trade fair value gaps on Bitcoin USD, or how to trade Bitcoin USD in general, or how I trade Bitcoin USD. Okay, so first, if you don't know what a fair value gap is, I do have other videos where I go more in depth on fair value gaps and what they are. I'll link it down below. Yeah, so first, what I'm gonna do is I'm gonna isolate these areas, right? Don't mind these stuff. That's just me practicing and stuff. So first, I'm gonna isolate an area. I'm gonna isolate this area, and what other area? Yeah, why not? I isolate this area too. Why not? You know what? Why not? Alright, for the sake of the videos. So let's do the bullish trend first. Alright. So if you've been watching my videos, you should know that what we do first is we try to identify the trend. This is the simplest way for you to be able to just figure out things faster and not get chopped up, right? So first, if you've been trading for a long time, you already know. You can just off whip look at it and say this is an uptrend, and this right here would be a downtrend if you've been doing it for a long time. But for those of you who haven't, this is how you identify it. Right, to identify uptrend, you first gotta find out the start of it, which is here. Right, this low broke this lower high and formed this right here, which is a higher high. Right, see this? See how this right here was this right here? See this? See how it got taken out by this right here? See, look, this was taken out. So now once this was taken out, you're waiting for price to come back down and form a higher low, which was right here. Right? So it started it here. This right here took out this right here, which was this is its previous downtrend. This was the previous downtrend. If you look, this is basically another downtrend going down, right? So this right here is another downtrend going down. As soon as it broke this lower high here, it formed a higher low right here, right? That's the start of the uptrend, right? So now you just literally, it's like a zigzag. You just literally find the next. Once this was formed, you wait for something to break this higher high, right? Which was around. You can use this if you want, but we're looking for stronger dips. But because this is Bitcoin, you're not really gonna get a perfection, so you can use this one. So once this was formed, it broke this high and formed a new high. Then it dipped down a little bit. That's the difference between Bitcoin and a lot of pairs. Bitcoin is very volatile, so you're not gonna find big dips. You're not gonna find big dips, you know. Sometimes it's just gonna go. So you gotta be able to just identify it at certain times. So once that got formed, this high was formed. This high low broke this high and formed this new high right here. Then what happened? It came back down, dipped down, formed this higher low right here. Then that higher low broke this high and formed this high. This new high, and then this high came back down, formed this right here, which is a new high low. Right now, why aren't we gonna do this one? Because it never broke this high over here. So now this will be considered ranging or consolidating, right? I wouldn't even use this as a high low because again, this high low never broke this high low over here to form a new downtrend. It just kept consolidating within these right here. So I wouldn't even use it. I'll just wait. Now notice how this one came here to this area right here. Right, and never really broke it, just touched it. But we're not worried about this right here. That's gonna be next once I'm done with here. So let's just focus on what's in the box right here. So it's like low, lower high was broken, so it formed a high, high, low. Alright, high, high, low. I'm not gonna do every single one of them, but I'm pretty sure you guys get the gist of it. High, let's say high, high. High, low. Okay, so once that's done, that's how we know that this is an uptrend. See, it just keeps going up, right? So now, what do we do next? Once we identify the trend, bullish trend, now we're waiting for 8 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. Okay. Right. Then once we wait for that, what we're gonna do next is once we identify that this broke, we're only gonna identify fair value gaps after it breaks these highs. Right, this lower high, once it keeps breaking them, that's how we know it's an uptrend. So we're gonna look for fair value gaps after it breaks this lower high and starts the uptrend. Okay, so now first, what do you see here? Fair value gap, right? Value gap is 3 candles and the gap between the first and the third. So 1, 2, 3, and the gap between the first one here and the third one here. And you're just gonna drag out the rectangle, right? Do we see another fair value gap? There's one here, but remember this is a downtrend. We're looking for uptrend fair value gaps. So because this is going down, this is a downtrend fair value gap. You wouldn't use that. You're only looking for uptrend fair value gaps. This is an uptrend fair value gap. So what's this? 1, 2, 3. Take it, stretch it out. Alright. What other fair value gaps do you see? Look. We see 1, 2, 3. Take it, stretch it out. Let me see if I can make this a little bit smaller. So yeah, make it a little smaller. So this is the first candle, this is the second candle, this is the third candle. The wick and this third candle wick don't touch. So that's a fair value gap. No. What other fair value gaps do we see? Like, what's this? So fair value guys. So we're only looking for bullish fair value guys. We don't care about these. Let's see, 1, 2, 3 going down. This is going down. We're not worried about that. We're just worried about the uptrend. So this is 1, 2, 3. So the gap between the first and the third, you take it, pull it out. Okay. So once we identify the fair value gaps, remember if this is happening in real time, obviously you're not going to be able to identify these fair value gaps happening here. If prices right here right now currently, obviously we wouldn't be able to see these, but you can tell them as they form, right? So how do we know when the fair value gaps get formed, or how do we know when to enter? Yep, you have to wait for 8 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time every day, right? So I'm gonna show you guys right now. Once this high was formed, right, and it came back down into this fair value gap here, right? We're waiting for time. So anytime between 8 a.m. and 11 a.m., that's when we enter. So we're waiting. The first time price touched was around here. What time is it? 1600. So you can't enter. Waiting. This is 8 a.m. Eastern Standard Time right here. Right? If you wanted to, you could have entered that. Let me show you guys what happened. So if I enter that 8 a.m. Eastern Standard Time, right? You could enter that, and your stop loss will be below the first candle. This candle right here. This was the initial start of the candle. 1, 2, 3 to form the fair value gap, and your stop loss is gonna go below this candle right here, the first one. Right? So notice how it's only there for safety reasons, because price can always come, as long as you see how big this fair value gap is. Price can always come in here, play. See, it touched here, went back up, then came back down, took it out. It plays around the fair value gap. So you want to have this stop loss as big as possible within this range. So you don't want to stop loss all the way down here, but the best thing to do, the best safety thing to do, is to put it at the initial start of the fair value gap, which is the first candle. All right, because notice price will always come down, but if it's a really good fair value gap and it's not going to continue the downtrend, it's going to hold. If it takes it out, then guess what? Yeah, you lost a little bit of money, but guess what? You're still safe. Okay? But notice how price is playing around here. Yeah, price touched this 8 a.m. Eastern Standard Time. Price went up, came back down. Don't get scared. Why? Because the fair value gap is still holding. Your stop loss still didn't get hit. The next day comes, you're waiting again. Right? Look, this is another 8 a.m. So what you could do is you could enter again. Put another entry, put stop loss down here. Right? So we're waiting again. The next day, look, price is still playing around. You could have entered again. That's a third entry. So it's giving people opportunities. So you could have had 3 entries in this one trade, fair value gap. Right? So next, waiting again. Look, it's just consolidating. Don't get scared. It does this to get people out, to get people in. It does this. Look, another 8 a.m. Right here. Price still within this fair value gap. So guess what? Another entry. That's what? 1, 2, 3. That's 4 entries already on Bitcoin. And you could have held. Waiting again. Look. On Monday the 13th, right? Price finally went up. Look. 8 a.m. up is here. So you wouldn't enter this one because it's all the way up here. Right? But look, price finally flew up. Alright? And look, it formed another fair value gap here. Let me zoom in. You know, once price on the next week, Monday, price started finally going back up, right? Formed another fair value gap. So you would draw another fair value gap here, and you would wait for price to come back down into that fair value gap. Notice how 8 a.m. here, 8 a.m. is above this fair value gap right here. I don't know if you guys can see it, but this candle right here is 8 a.m. Notice how it's above the fair value gap. No price went back down here. You wouldn't take this trade. You would just wait. So you wait. Look, price came back down here, right? Then what? 8 a.m. right here again. So this is a 5th entry now. And where did the 5th entry happen? Within this fair value gap. So for the sake of the video, I'm going to go ahead and enter. And guess where we put it? Below the first candle. This is the first candle. Stop loss right here. Look, price never went past that first candle. Look, now you have 5 entries now. Okay? 5 entries now. 9, 12. Now we're waiting again. New day. Look at this. 8 a.m. Price already left. So you wouldn't enter this candle because it already passed where the fair value gap is at. It's already gone. So now you're waiting. Look, now you have 5 entries on gold. You're so deep in profit, it's not even funny. So you're going up, formed another fair value gap right around this area. Alright? So what are we doing? You guessed it, we're waiting for price to come back down here. Alright, and when did it do that? This is 8 a.m. Came back down 8 a.m. you know, and you could enter this, but watch what happened. I want to show you guys this because, you know, it happens. So you can't win them all. So notice how price went down 8 a.m. Eastern. It touched your fair value gap. You could enter again. Your stop loss is going to go below the first candle. 1, 2, 3. Now, if the stop loss is all the way down here, guys, don't take it. It's too deep of a, because initial candle was this one that you use, right? Now, you could do it if you want. You could hold it because, look, price never went back down. But in my opinion, I wouldn't take it. It's too big of a stop loss, you know. But you could if you want. But again, if it's below the first candle, guess what? Price never touched it. It just kept going up. Right, but you could take it if you want, but I wouldn't take it because it's too big of a stop loss. Not worth it. So you probably just wait again for another entry. Right, you never got another entry. This is not a fair value gap. The first and the third candle they touch. No point. You just wait. But remember, you already in 5 to 6 entries. Like, you don't need to enter this one. That's just being greedy. So you're waiting again. It keeps making an uptrend. It keeps going up. Look, formed a fair value gap for you to finally take. Like, you make a fair value gap and you wait for price to come back down into this. You're waiting, price never came back down here. You're skipping all this, price still never came down here. Price finally came down here, right? But at what time? 8 a.m. Eastern Standard Time right here. 8 a.m. right here. So you could enter this one. But I want to show you though, like, you're not going to be correct 100% of the time. Your stop loss, since this is the first candle, second and third, your stop loss is going to be below this first candle right here. And look what happened. You got taken out. Now, this is fine. It happens. It's a good thing it happened because guess what? It's a good thing that happened. Why? Because guess what? You got taken out. If you kept holding all the way down, you see that price started going back down. You know. So if this was the first loss, right? Let's look at how many wins you would have had if you kept holding, right? You entered 5 times here, right? You entered, if you decided to take the one, this would have been sixth entry, right? You would have only lost this one. So that would have been seven entries and you would have lost 1. You know, that would have been a high ass win rate. You know, so you don't need to win every single trade, but this guy here would have been good, right? Next, we're gonna be doing how to identify a downtrend on Bitcoin. So this is going down, right? So how do we identify it? Basically the same way we did it last time. You know what, let me just, to save time, 8 a.m. Eastern to 11 a.m. Eastern, because that time is very important. I'm going to put bearish trend here. You know, how do we know this was the high, this was the low? High took out this low from this lower high. Let me not be lazy, you know. So this was a high. Put this tiny low right here. Yep, so on and so forth. I'm just gonna stop right there, you know, just to, you know, but so on. It just keeps doing the same thing. This low form came up, low form came up, low form came up, low form came up here, you know, tank down. Now, I want to show this to you guys. This low that formed here, it came all the way down, right? Why didn't we use this one? Remember what I said? If it's ranging within this was the initial lower high that formed. This was the next lower low that formed. If it didn't break that lower high, it is ranging. You know, so you wouldn't use any of this in here. This right here, you wouldn't use it because it just kept going up. But you would use this one though, because why? This is the new lower. It never broke this lower high. It formed a lower high here. Lower high here. Never broke that lower high to make an uptrend. Instead, it just kept holding. So that's the new lower high. This would be the lower low. You can use this one. Why not? Lower low. Remember, Bitcoin is is more volatile than a lot more pairs. So you're not gonna get a huge pullback. So you gotta remember that. But it goes off experience. So the more you practice, the more you can identify them and identify which ones you can and can't use. Okay. This was the high low that got broken. This was the initial high. So this was the high low that got broken. This was the initial high. This high took out this high low right here to form the lower low. Now it starts the downtrend, lower high. This lower high broke this lower low. This lower low pulled back, formed a lower high. Never took out this lower high. Kept going down. Formed a new lower low. Went up, made a new lower high. Need to charge my phone. Made a new lower high. Came back down. Lower low, lower high, lower low, lower high. Kept going down. Okay. So what are we looking for? Now that we identified the bearish trend, because now it's going downhill, now we're waiting for time, right? So what you do is now you start identifying once this lower low was formed here, you're waiting for lower low. So you're only going to look for now bearish trends. So you're going to look for a bearish fair value gap. What is this bearish fair value gap? How do we know? 1, 2, 3 candles. The gap between the first and the third fair value gap. Another fair value gap we see right, 1, 2, 3 gap between the first and the third fair value gap. What are we looking for? 1, 2, 3. It's very tiny, but guess what? That's a fair value gap. Let me zoom in so you guys can see that. Look. 1, 2, 3. Fair value gap right here. Let's identify another fair value gap. Look. 1, 2, 3. Gap between the first and the third. Another fair value gap. This isn't a fair value gap. Why? 1, 2, 3. This third and the first wick they touch. Alright. Another fair value gap. What do we see? 1, 2, 3. What do we do? Fair value gap right here. What are we looking for next? Obvious ones. No. 1, 2, 3. 3 candles. Okay. You know what? I want to show you guys this one. You see this? 1, 2, 3. Notice how it's going down and there was a fair value gap that formed there. I'm going to show you guys what happens, right? So we're going to do that one too. Let's just identify all the fair value gaps that we see. This is a fair value gap. 1, 2, 3. There's a gap between the first and the third candle. You just drawing a candle. You just drawing a rectangle within the fair value gaps every time. This is a fair value gap right here. 1, 2, 3. Make sure you look for obvious ones, guys. Like, don't just pick any one because you never know. Look, 1, 2, 3. This is 3 candles. You could drag it out. You know, and that's just within the rectangle. So let's stop right there. All right, so now that we have all the fair value gaps identified as best as we could, what are we doing? We're waiting for price. We're waiting for price and time, or time and price, right? So once this lower is formed, we see the fair value gap. We're gonna wait until 8 a.m. Eastern to 11 a.m. Eastern for price to come into this, and we're gonna enter, right? So what are we doing? 8 a.m. Eastern. This is 8 a.m. right here, right? But it never, this candle right here, like, this is 8 a.m. Eastern right here, right? But notice how this green candle never went back into this fair value gap. We wouldn't enter this one. Waiting again. Look, now it's Sunday, right? Yeah, this 8 a.m. candle entered here on a Sunday, but majority of people don't trade on Sundays. But you know, technically, that's how you do it. So as long as we wait for the time. Yeah, you could trade on the weekend as well because they're cryptos. You know, they're very slow, but you could trade on the weekends. This was the initial start of the candle. This first one here. Remember, stop loss goes above that candle right here. And you could hold for 101, or you could just keep holding, because now you know it's a downtrend. You could just keep holding, you know. But let's leave it like that, you know. So this would have been one entry right here on a Sunday. You would have waited again. Look, on a Monday 8 a.m. Look, another entry. So you would have had 2 entries now around here. Look, on Bitcoin. Oh, it's good. So that would have been the second entry on Bitcoin. You would have held. Like, it's really simple, honestly. Like, you just wait for fair value gaps doing time. Once you identify the trend, you look for fair value gaps doing. You look for fair value gaps within time. All right, look, price was gone. All right, another fair value gap formed here. Now let me delete this. So that would have been 2 entries. Look, another fair value gap formed here. We're waiting for price to come into that fair value gap before we get an entry. So even though right here this is 8 a.m. in the morning, we wouldn't enter this. 1, there's no fair value gap, and 2, it's already gone, and 3, price never went back into this fair value gap. So we would just ignore this 8 a.m. and just wait, right? But look, we'll still be in 2 entries, like, you know, we're in positives right now. Now we're waiting again. Remember, this is a downtrend, so we're just waiting. And what's this? Another fair value gap, right here. But guess what? That's right. Wednesday. What is this? 8 a.m. Eastern. At what? 8 a.m. Eastern. Next to this fair value gap. Guess what we're doing? Another entry. That's 3 entries now. You know. And where would our stop loss be? Above the first candle. Right? So if you enter the 8 a.m. above the first candle, honestly, you wouldn't have got hit, because again, remember, this is the 4-hour candle. So on the 4-hour candle, 8 a.m. Eastern, price wouldn't even like be up here. It would be down here somewhere, right? But this is just the 4-hour candle. If you're waiting for the 4-hour candle to close, you're gonna wait for the 4-hour candle to close. Once that closes, you're gonna enter, and it will be above the first candle, and you you would not have been hit. Okay. So you're holding again for 1 or 3. No, this is the high time frame. So remember, we only enter when the candles close. So this 8 a.m. candle closed on the 4-hour. But guess what? We would have entered and we would have wrote it down. So that would have been, what is it? 1, 2. 1, 2. That would have been 3 entries in the positives right now. So we're waiting again. Look, fair value got formed around here. Right? What are we waiting for? It to go back up there. No. Because it's outside of the time. 4, 8. Look, 8 a.m. right here. 8 a.m. entry right here. Remember? So we would enter. That's a 4th entry now. You know, and then guess what? Stop loss will be above the first candle. You know, but in this case, since the first candle got taken out by this candle right here, the stop loss would be above that candle, the second one. Okay. So you would hold again. That's what 1, 2, 3, 4. That's 4 entries now. You would still be holding, right? You would still be holding around here. Look, a new fair value got formed on a Friday. We're waiting for price. Look, price is just consolidating. Look, price did come back up here, but guess what time? 16 o'clock. So we didn't use it. We'll wait. Look, 8 a.m. Price never went back up here, so we're not entering that. We're waiting. Look, 8 a.m. right here. Price entered. So this is what, 5th entry now at this time. And stop loss would be above the first candle here. But in this situation, since look 1, 2, 3, it will be above this candle. But since this second candle took out this first candle, stop loss would be above that, and you would hold. Price came up. Look. This is why we hold. This is why we have room, because look, price went back up here, and look, it still didn't take you out. So you would have been holding. This would have been the what, 5th entry. Again, you're waiting. Look, another fair value got formed around here. And what are you waiting for? Price to come back up during time. So you're waiting. Look, 8 a.m. here. Price is already gone. Wouldn't have been a good entry. Now right here, yeah, price was formed around here, right? Fair value gap was formed around 8 a.m. We're waiting for price to get up there. Look, 16 o'clock, 20 o'clock. Look, 0, 0. Like, you see, price is already above it at this certain time. So this wouldn't have been even a good trade. Like, you would just ignore it entirely, because price went above it, doing all, look, it just, look. So you would just ignore this trade entirely. Like, it just doesn't make sense. So you're waiting. Remember, this is the lower high. The lower high never got taken to switch over to a bullish trend. So you're waiting. Remember that fair value gap you drew up here, right, on a Monday. Price finally hit that fair value gap. And guess what it did? Guess what time this is? 8 a.m. So guess what you're doing? You're entering again. Stop loss above the initial candle, which is this one right here. This was the initial candle. Stop loss above it. And you're holding. And guess what? You would have held. Alright? Then you would have went. We see a fair value gap here, 1, 2, 3. But guess what? Price never went above it, so we're ignoring that. Now you're like 6 entries, 6, 7 entries on Bitcoin. You're just holding. Like, this is how you stack. This is crazy. Look, fair value gap here, but guess what? Your waiting price never went back up here, so you're still holding the 6th entry. See, like, this is how you finesse trade. Like, it's so easy to trade fair value gaps, because it's just so basic, so easy. You're waiting again. Fair value got formed around here. You're waiting. What happened? Price went up into that fair value gap at what time? 12 o'clock, 16 o'clock, 20 o'clock, 4, 8. It went at 8. You could have entered this trade. You could have. But, look what happened when you did. So this would have probably made you lose if you entered it. If you have a tight take profit, you would have made 101. But this right here would have made you lose, because you would have probably held, and then you got taken out of this one. But guess what? This lower high still never got taken out right here. This lower high never got taken out. So you're still holding these trades, this 6 trades. So you would have lost one tiny trade, right, and still be deep in profit with the other 6, right? Look, there's another fair value gap here. This lower high never got taken. You're waiting. Guess what you see here? Guess what you see here? 8 a.m. in the morning, price went up in here. Around 8 a.m. in the morning. Guess what we doing? You guessed it. We're entering here, 8 a.m. Because it's within the fair value gap. We're entering and we're holding again. This would have been the 7th trade. So you would have lost 1 out of 7. You would have been, 7. No, yeah, 8. You would have lost 1 out of 8. So you would have been 8 trades, and you still holding these trades. You just keep holding, and then boom, price would have went all down, formed this lower high, then this lower low. Right, you so deep in profit, you're chilling before price finally decided what? You guessed it, to take out this lower high here. Once that lower high gets taken out, you're out of the buy. You're not in this no more, right? You're not in this no. Even if it continues, you're not in that buy no more. you're not in that sell no more. You're in a buy. Then you would have started looking for fair value gaps to enter buys here before it turned over into a bearish trend. So this is how you trade Bitcoin on using fair value gaps and time. So the issue really, in my opinion, the issue in my opinion really is honestly, you just gotta wait. This is the patience. I know it could be very tempting to enter out of time and stuff because you want to catch some money, but patience is virtue. Notice how price does it every single day around the same time. And this is only the 4 hours, so you could have went on a lower time frame to be able to catch all this if you really wanted to. But yep, so that's it, guys. Check out other videos if you guys want more in-depth explanation of fair value gaps and how I use them on other pairs. And yeah, that's it.